All right, traders, it is the 7th of January 2017. My name is Jameson. Welcome to Behringer Trade. We're looking at a daily candlestick chart here of the Russell 2000 IWM. This was a chart request here from the webpage. And let's take a look here. So up top we have an RSI. We have the the data right here. We have volume, chocolate money flow, and the MACD here. So some of my observations here is that one, of the trend is bullish. Trend is defined by the limits of the upper trend line and lower trend line, so resistance here, and then the demand line. We can also see that the 20-day, 50-day, 100-day, and 200-day are all rising. Therefore, the trend remains intact, and I would say it's accepted at the present time. Now, we can also see that we have some periods of consolidation and then periods of kind of trending, and I'll kind of reference these down waves here as a counter trend. It's kind of a reverse trend with the larger bullish trend here that allowed participants to kind of buy the dip to participate and get lower risk long entries to participate in the overall kind of bullish trend that we have here. So starting up top, we have an RSI. We have a little breakout here. So price action currently is resulting in a bullish breakout along this angled decline here. So it's a bullish observation. I had previously kind of commented on the pullbacks, the declines into this demand line here. And very difficult to not be a little anxious while we lost the 200-day simple moving average here. This really created a sign of weakness. But once prices kind of had a pretty solid retracement here, and on this back test into the 100-day moving average, when no supply presented, and we're holding this this demand line that's here, that really was a strong buy entry here, and we were actually we're bullish into that. So that was very good. But as you can see here, as we trade in the resistance, but defined by the upper trend line, it kind of there's no reward there, right? So from a risk reward perspective, longs are now buying in the resistance, so kind of poor form. So we saw some lateral consolidation, and then we kind of broke down here into the 50-day, into the demand line that's here. Now, what I had briefly discussed previously was the character at which they broke down. So the first breakdown broke down at a pretty steep angle of decline. There's some gaps there. We're closing at lows, some volume expansion. So there's some weakness here. There's some fear here. On the second breakdown, it's much more controlled. The price spread started a little bit more narrow, and even when the price spreads widened, it still held this support defined by this lower trend line of this bearish descending channel that was there. Here you can see that it's washing out support. So this seems very, I don't want to say manipulative, but this was characteristic of buying. So the angle, the decline was less aggressive, the narrowing price spreads, and the fact that support was being held kind of gave us the confidence with a new high to kind of buy the dip. And you can also see that we break out through this level of resistance. This was nothing more than a back test to confirm this level of resistance here as support, and then it rallied through there. So there's kind of a confluence between back testing this level of resistance and then again trading into the demand line, this lower trend line that's here, and then we rallied higher. So now we're breaking out of another trading range and we're starting to trend. So again, we're either trading or we're trending, and at present time we're trending. The amount of time spent in consolidation here would give us a $158 price objective. That would be just above this upper trend line that's here. And you can presently see that also has been unfulfilled. You also can see that as we trade into highs, that we're also forming a bull flag. So if we do a measured move based on the length of the bull flag, that would put us pretty close to 158 to 160. So there's again there's another confluence around 158 to 160 in addition to the trend. So we have about 3 data points that kind of correlate with some additional upper price discovery. Also, if you look at the character of the bull flag that's here, aside from the Friday rebalancing into the end of the year here, it's very bearish. But from a relative standpoint, the volume is actually contracting. So there's not a lot of weak hands that's present, and then we rally above. And you can see that we're doing so with pretty reasonable volume there. So I still remain bullish. If we look at chocolate money flow, it is on the bearish side, but we're kind of contracting back to the zero line. The MACD has kind of been around its upper limits here since mid-November, but it is actually attempting to expand. It is pointing up, so I'll say it's neutral to bullish. And I'm actually kind of attracted here to this breakout here in the RSI, but I stand kind of by the actual price objective, which is measured. Kind of bottom line up front, my bluff summary is that I remain bullish, and IWM continues to have some additional room for upper price discovery before it becomes overbought. One, technically, but then overbought relative to its current trend. And at that point, historically, it has actually broken back down into the demand line. I would assume that we'd either continue laterally and have to consolidate, work off the overbought conditions through additional lateral trading around 158 to 160, or if history kind of repeats itself, it'll kind of break back down into the 50-day simple moving average. And then now we also have some down waves to compare it to. So we can look at the character of that breakdown. Is it on a widening price spreads? Is it narrow price spreads? Does it occur at a steeper angle advance, or is it pretty flat? So if we have some lateral consolidation and then rally through there, that actually kind of tells me that people still have a longer term bullish outlook here for the Russell 2000. So those are my thoughts here in IWM. I hope you found that helpful and informative. Good luck trading this week, this month, and this year. All right, traders, go get them.